So let's talk about last week's watch list and how it performed. That way you guys can kind of know what to expect from these kind of watch lists that we post every single week. So last week we were talking about PRTH. That one gained 12.33%. We also talked about Blue BLU. That one gained 9.57%. We also talked about let's see here, Docu. That one gained 1.68%. We talked about PTON. We were talking about that being a short play, and that one ended up dropping 7.59%. So we had a great short play there. We also talked about FLGC. That one ended up gaining 34.97%. We talked about Tesla. That one gained 7.22%. We talked about Apple AAPL. That one gained 3.76%. We talked about Starbucks. That one gained 3.27%. We also talked about DBX. That one gained 6.07%. We talked about PayPal. That one gained 4.79%. And there's quite a bit more. So if you guys are interested, make sure to check out the video that I'm going to drop and link right above here. So make sure to check that video out. That's the watch list from last week. That's the stock talk we had last week. And that's how those stocks ended up performing. So what we're going to do is in this week is we're going to end up talking about the S&P 500. We'll talk about the NASDAQ. And then we'll talk about the watch list that we have for this week. We're also going to talk about the opportunities that you guys should be paying attention to. That way you guys can see similar gains to what I just listed off from last week's watch list. So let's go ahead and jump right into it. The first thing that we're going to end up talking about is we're going to talk about the SPY. So we're going to look at SPY. That's the S&P 500. Last week, we ended up seeing quite a bit of selling, and the week before that, just on a bit of a bit of, uncertainty in the markets. And so we ended up seeing quite a bit of selling going on. We saw it was about 5.79% of a correction. We ended up dropping below this trend line that we were in, that bottom support trend line that we were in for the last pretty much entire year. And so we ended up pulling back right above it just now recently. So it looks like we did break the 50-day moving average. It looks like we did break above that above that bottom trend line that we were in for that channel. And it looks like we are finding support here at the bottom of this channel. So from here on out, I am expecting us, if things go smoothly, in the overall markets, I do expect us to recover that, probably at least to those previous highs, which is another 2.95%. And then I anticipate we will probably make new all-time high. So we're looking at another 5.11% here in the SPY. The NASDAQ looks pretty similar to what the SPY is going to look like. So that's going to be /NQ. Very similar setup. As far as, what we saw going on, we saw that double bottom. This one ended up being, a higher low than we saw in the SPY. That one was more so of a double bottom here. We just saw a higher low. And it looks like we are starting to recover here on the NASDAQ as well. So that's pretty much what's going on with the overall market. Let's go back to the SPY and kind of talk about what's going on right now. We ended up seeing a little bit of a pullback happen here on Monday, which, it shouldn't be too surprising for a lot of people. I mean, obviously, if you're, not too aware of what's going on, then you might be in a little bit of a panic mode. But as far as the pullback that we ended up seeing, it's not very surprising. We ended up having this double bottom, this W shape. We ended up breaking up to the upside, recovering with the market, right? And then we ended up breaking above this bottom channel support line, right? And so, a lot of people expect this to just continue to rally all the way until we make new all-time highs, or at least reach those previous highs. That's not really how the market works, right? So we ended up breaking through that support line, or that became a resistance line when we broke below it. So we broke through that resistance line. We broke above that 50-day moving average. And then we ended up hitting this 180-day and 200-day, which is this green and yellow line. That's the 200-day and the 180-day moving averages, which that used to be a support for us. But now, since we broke below it now is a resistance for us, right? So we ended up finding, resistance right up here, which isn't surprising. That was to be anticipated, right? But the biggest thing that we want to make sure that we're paying attention to is the fact that we came back down and we found support not only on the 50-day moving average, but we also found support here on this bottom trend line. What that tells us is that, it's just testing and ensuring that we do actually have a support level there, and we are truly back in this channel, right? So if we do break below it, expect for us to at least sell off to this first level of first level support here at 437. And if not that, then probably 430, 431-ish area to that bottom that we saw just recently. I don't anticipate us doing that. And from what I'm seeing, you know, it looks like we are starting to curve up here on the RSI. MACD looks like we have a little bit of a pullback down to the downside on the MACD, but I do strongly believe that we are just testing this support level just to make sure that we're actually breaking up to the upside, right? So it's going to be kind of a staircase pattern all the way until we at least reach those previous highs or all-time highs, right? So don't be surprised. Don't be, you know, don't start panicking right away when we see a little bit of a correction. Mostly what we saw on Monday, and the reason it pulled back is because we ended up seeing a lot of weakness here in the tech sector. And we also ended up seeing the government yields, the government bond yields rise, you know, so that in essence caused a little bit of a market correction here on Monday. And, you know, it does align very well with our 180-day where we found resistance. It aligns with the support on the 50-day moving average, and it aligns with this bottom channel trend line, right? So, you know, it all kind of comes together. And if you're doing technical analysis, it's very interesting to see kind of how, you know, the events that are happening in the world and in the economy align with technical analysis, especially when you've had it drawn out ahead of time, right? So we did have all this charted out ahead of time, and we're just watching it basically find support at these levels that we already anticipate that they're going to find support at. So that is in essence how you end up being able to predict or have a better thesis as to where the market should go or will go, right? So nobody technically knows where it's going to go, but if you are prepared and if you have all these technical elements charted out, then you're going to be prepared to know that, hey, we might see support at this level, which is exactly where we're finding support, or we might see resistance here at the 180-day, which is exactly where we saw resistance. So that's in essence what's going on. Like I said, I do anticipate us finding support here at this bottom channel trend line, and I do expect us to begin a recovery, if not to all-time highs, then at least to those previous highs, which shouldn't be too surprising because we're just going to hit this basically this yellow line, which in essence, if we're looking at the standard deviation channels, that is in essence just the mean line, right? So the market tends to return to the mean line eventually, right? So I do anticipate we're going to return at least to this level right up here at 454. So that is kind of my, I guess you can say, market prediction. You know, we obviously called this bottom. If you watched last week's video, we saw this coming. We saw this double bottom, and we did talk about this market beginning to recover and that it will recover. And that's exactly what we ended up seeing. So if you guys are interested, make sure to smash that like button and subscribe. We do these videos every single week, and let's go ahead and hop into this week's watch list, what we're watching as a team for this week, and then see where we go from there. So the first stock that we're going to be taking a look at is going to be DKNG, and that's DraftKings, DKNG. So this one here, we ended up seeing quite a bit of a pullback happen. We are very, very oversold here on the RSI. Let's go ahead and zoom in here. We are very oversold here on the RSI, as you can see. And then as far as the MACD goes, it looks like we did just pop up and got a signal as far as we're running up to the upside. We did come down to the support level that we saw back in August. So we ended up pulling back to this, and this red line right over here, this has to do with the volume profile level, and this is a critical volume profile level. So there is a lot of demand at this level. So we're probably going to see quite a bit of volume. Once we do break above, I would say 51.78, I do anticipate us breaking up at least to this 180-day level, 180-day moving average, which is about 8%. I wouldn't say we're going to return right off the bat to those highs that we were at 64, but I do see us returning up to this 180-day level, which is about 8%. And this also aligns with this resistance level that we've been seeing back in pretty much June and then also in August. So once we come up here, we'd probably test this resistance. That's going to align with pretty much all the moving averages and this resistance level. So it would make sense for us to come back up here. We've got quite a bit of room to run on the RSI and the MACD. Obviously, we are starting to get a signal to the upside. We're just going to be watching to break above this 100 or break above this 4-hour EMA, right? This blue line. So that's what we're watching here on DKNG. That's going to be the first stock that we're watching. The next one is WIN. So with WIN, we ended up seeing quite a bit of action today. We did talk about the WIN, you know, obviously when the market sold off, a lot of these stocks were down, obviously, because of the market selling off. But today, just today, we ended up seeing approximately, how much was this? I believe it was about 6% that we ended up seeing in gains just in today, 5.97, basically 6% in profit just today. We ended up coming up to that 50-day moving average and testing this 50-day moving average, that also once again aligns with the volume profile level, the critical volume profile level. So that we did end up reaching this level. If we do hold that 50-day moving average, which I expect that we will, I anticipate that we're going to move all the way up until this 180-day moving average, which is another 10% from current price points, right? We do obviously have plenty of room to run on the RSI, so it's very, very probable that it's going to happen. And then once again on the MACD, I mean, we are starting to see a little bit of purple, but obviously if we're trying to break up to the upside, we're going to see a little bit of resistance here and there, like we saw back here, like we were obviously seeing right here at the 50-day moving average. So with WIN, obviously this one has been selling off for some time. This one has been selling off basically since the beginning. I would pretty much say since the beginning of the year. It's basically March. Ever since March, we've seen pretty much a sell-off happening. The reason this one catches my eye is if we look at the 1 day move or 1 day, 1 year, we haven't seen these levels that we're at currently since basically, I would say, November of last year. So in essence, the price point that we're at with WIN is a very, very great deal, right? And not to mention, we are starting on the daily chart. We are starting to curve up to the upside here on the MACD. RSI, plenty of room to run. So longer term, I do see this playing out very well. This week, I also am paying attention to this just because we did see quite a bit of selling last week due to the market selling off. And so I do anticipate WIN's a little bit laggy, so it's lagging as far as the recovery goes, but I do see this recovering here in the near future. Like I said, at least to that 180-day and 200-day moving averages, which is about 10-11%. It might come up to this $98 level, which should be a resistance from previous historic patterns. So, we might pop up just above it and have a little bit of a struggle, or we might just get rejected right up here. So I'd start watching it to take profit around 94.44. That's where I'd be watching WIN. So that's the other one that we're watching. The next one that we're going to be watching is CHWY. So CHWY. CHWY right here. We're pretty much watching this because we came down to this support level. This support level is based off of the fact that we had this support level all the way back in May. So we haven't seen these price points where we're at with CHWY since basically May, right? And so once again, this one started selling off due to earnings, and then we ended up seeing market correction happen, which dragged this down even lower. And then we finally found support here at this level that we made back in May. So, I don't see us going very much lower than this. So I do anticipate this is going to start recovering quite a bit here this week. And so as far as what we did today, just on Monday, so our team, the Facer Trading Academy team, we ended up seeing this pop up pretty much 3.15% just today. We talked about this on Sunday night. So the team gets the watch list every Sunday night. And then we watch how the market performs on Monday. And then we talk about it and see if the options that we talked about are still viable, right? So that's the reason pretty much we're watching CHWY. This one's at a support. I would anticipate, having, a stop just around maybe 66. $66. I wouldn't expect it to drop that low, but in case it does, obviously you want to manage your risk and protect your capital. So the first level of resistance, obviously we're watching this EMA. We need this break of the EMA. The next one's going to be the 50-day, which is the 73.66 level. The next one after that, we're watching $78. And then after that, we're watching 83.41. CHWY, this one has huge potential. So as far as the risk to reward goes, obviously we're managing our risk at 66. So it's just below this support level that, I doubt that we're going to drop below that. As far as our profit potential, if we recover to those previous highs, we're looking about 29%. So quite a bit of potential there. As far as the risk goes, it's very minimal. We're looking at about maybe 5% risk for about 30% profit potential, right? And that's just to those previous highs. I don't know if we're going to recover to those all-time highs at 120. That was a bit of its own kind of situation back in February. But, even if we do, that's going to be about 40%. So 30% of 40%, I mean, 30% is still a huge, risk to reward ratio that I definitely find very attractive. So that's the one that I'm looking at, and that's why we're looking at CHWY, and that's why we're looking at it this week, because it looks like we are starting to push up here on the 4-hour chart on the MACD. We're starting to curve up to the upside. And then as far as the RSI goes, obviously we have plenty of room. The first thing we're watching that break of the EMA. So that's CHWY. That's why we're watching CHWY. The next one that we're going to be watching is PTON. So this one we were looking at a short last week. We talked about that with the team. As far as this week, it looks like we did break. The reason we were looking at a short is because we were starting to break down to the downside. We were finding resistance on this EMA, and we consistently kept selling off every time we tapped it. So we ended up selling off all of last week, and then now we finally found support here on the 89.82 level, which is a previous support from historic patterns, right? So that's how we knew that it was going to come down to this level. This used to be a resistance on the way up all the way back in May. That was a resistance. We tried to break it a couple of times, and then we finally broke to the upside. And then now it started becoming support, because when we break the resistance, it becomes a support. And then when we break the support, it becomes a resistance, right? So now on the way down, it's becoming a support, right? And it looks like we are starting to hold up very well. Our volume profile level, critical level is all the way up here at 109. So that also aligns here with the 180-day and the 200-day moving averages, right? So those are very, very attractive. And so that would make sense for us to make this recovery all the way up to that 180-day, 200-day moving averages, which is about 17.76%. So that's the reason we're looking at PTON. Obviously, we're looking at the MACD. This thing's starting to curl up to the upside. It's starting to look very, very good. RSI, plenty of room to run on the RSI. We are very oversold here on the RSI as well. So those two elements are aligning. The fact that we're at this support, the fact that the critical volume profile level here is at this 108.87 level, and it also aligns with the 180-day and 200-day moving averages. So that would be the level that I'd be looking at as far as this recovery goes. That's about 15%, 16%, depending on when you get in. So that's the profit potential. Our risk is obviously going to be just below the support level. So we're looking at about 2-3% risk for 15%. It's a great risk to reward ratio. And PTON, obviously Peloton has been doing, very, very, it's been a little bit of a bumpy road, but it did very well earlier this year. So very attractive opportunity and option here with PTON. The next one's going to be Walmart, WMT. So Walmart, the reason this one caught our eye is because we have done very, very well over this year. If we're looking at the big picture, ever since basically March, we ended up having a huge sell-off down to this 126 level. And then ever since then, we've been trending to the upside all the way till 152. We ended up selling off down here to this support level. We broke a little bit. This used to be a resistance. So on the way down, it's starting to become a support. The reason I find this one attractive is because of, first of all, that support level. Second of all, we're not super oversold. However, we are still just basically consolidating here at this level. So we'll see what happens with this. If this does continue to sell off, that next lower support level that we're going to be looking at is 138. We're just keeping an eye on this one for sure, until we basically see a break of this 50-day moving average. Once we break above that 50-day moving average, from that point on to those all-time highs, we're looking about 5.51%. The profit potential isn't as great as it is on, PTON or something like that. However, holiday season is coming around. It's coming up. So a lot of people are going to go shopping. There's going to be a lot of money being spent. And as far as Walmart, this performance over the last year, you can definitely say that, it has been doing fairly well. I would pretty much, basically we were at 153. We sold off to this 126 level. We came back up to this basically 152 level, 153 level. And it looks like we're now selling off to this 180-day moving average, right? So I wouldn't be surprised to find support at this level, just because it's the moving averages, and it's also was a resistance on the way up. So we potentially might find support. We're not super oversold on the daily either on the RSI. So this one does have room to continue to sell off. So I wouldn't be surprised if this does come down to 138. Definitely just one to keep on your watch list though. And this is the one we're watching. No bias, whether it's going long or short, we are watching the direction that it's going. If we don't hold this support level that we're at currently, then we'd be interested in going on a short for this play. However, pretty much all the way down to this 138 level. However, we'll see what happens, right? So we're still just paying attention, keeping this on the watch list. That's why it's called a watch list. The next one that we're watching is ZM. So this is Zoom. This one has been selling off for some time now. The reason this one's on our watch list right now is because we ended up selling off to the point that we were at basically back in May. We are starting to look very oversold on the RSI on the 4-hour. MACD, it looks like we are starting to slowly curve up. We're basically just consolidating for now. However, today we ended up seeing some great action pushing to the upside here on Zoom. So we might see a little bit of a push here on Zoom this week. So we ended up seeing approximately 2.46% on Zoom. We have been fairly flat for the last like week or two. But, you know, like I said, we are at this very critical support level. The volume profile level pretty much loses traction any lower than this. So I wouldn't be surprised to see this start recovering. Our critical level is at 294. That's obviously not something to, you know, rely on solely, but that if we do recover to that point, that's going to hit our 100-day moving average, which is this red line. And it's also the critical volume profile level line. So that's about 8.12%. If we recover to the 180-day, we're looking about 19.88%. Obviously, if we recover to those all-time highs, we're looking at about, or not even all-time highs, but recent highs, we're looking about 50%. So huge potential here on Zoom. But like I said, we're mostly keeping an eye on this one for now. This could very well continue to sell off, but the reason we're watching it is for those reasons, right? And so what we're watching is we're watching this 100, or we're watching this 4-hour EMA line, and we're watching for a break. So today we ended up pushing up to it. We have gotten rejected by it before, so we'll see if we get rejected and continue to sell off, or if we break above it. If we do break above it, that next level is going to be the 50-day moving average, and then after that, 180-day moving average, and then after that, obviously the 200 and 180-day moving averages. So that's why we're watching Zoom. The next one's going to be UPRO. So we did see a little bit of weakness in UPRO today. We were talking about this one last week when the market was down. We had this great recovery of about 10.57%. And now we're still watching it just because I do anticipate us returning to those all-time highs. So kind of referring back to when we talked about the SPY, right? If the SPY recovers to those previous highs, this one will as well. And that is the 7.9. That's another 7.91% of profit on UPRO. So if you do want to invest in SPY and you kind of want to invest with the way it moves, UPRO would definitely be a great opportunity. Like I said, we saw a little bit of weakness today, so not to worry. We are holding that 50-day moving average, and we're just basically between that 180-day and the 50-day moving average. So we do have room to run still on our side before we get oversold. So we do have that potential. As far as the MACD goes, it looks like we are starting to curl down a little bit, but that just mostly has to do with the overall market, right? So pay attention to the overall market. Whatever the overall market and SPY and the S&P 500 is doing, UPRO will basically reflect that. So if that's all going up, so will UPRO. So that's why we're watching UPRO. UPRO is on our watch list quite often just because we do follow along with the market. COM, that's the next one. COMM, that's the next one that we're going to be watching here. COM. So basically, once again, this one's a great opportunity. And I strongly believe that it's just a matter of time before we start this huge recovery. We did end up seeing a huge push today. So that could be the beginning of this nice recovery that we've been waiting for so long for. We are currently basically at the levels that we were at back in February, which is very attractive, basically the bottom of this volume profile. So as far as, you know, what's going on with this, we ended up seeing a huge sell-off here with earnings. This nice drop that we ended up seeing a pullback down to the support level, pushed up. We talked about this pullback because we were very oversold. So folks from the team were able to capitalize on this recovery back to this resistance level. And then we ended up seeing the market selling off, which caused this entire sell-off to happen that came down all the way to those February levels. Our critical point on the volume profile level is sitting at $15. We're currently at $14. So we have room to run before that. If we break up to that critical level, we're going to be up basically up until above the 50-day moving average and the 100-day moving average. So that next point that we're going to be watching is going to be that 1612 level, which was a previous resistance all the way back here a few weeks ago, right? So if we break above these two levels, we're watching this resistance level right up here because that was a resistance. If we break above that, the next one's going to be the 180-day moving average. Ideally, what we're waiting for is for it to break all the way up until we return to pre-earnings levels, right? So that's going to be right up here, approximately. So that's another 48.07%. So that's what we're watching with COM. This is more of a longer-term play, but this week I definitely think that we're in for a bit of a recovery with this play. So CAT is going to be the next one, CAT. That's the next play that we're going to be watching. This one ended up popping off today as well. We ended up seeing quite a bit of a move. Once again, this one is sold off quite a bit. This has been at 246, and now we ended up selling off when the market sold off all the way down to this 188 level. We have been recovering ever since the market started recovering. This one was on our watch list last week. We talked about this one last week. So if you guys did watch the video last week, you were able to capitalize on this move right here. This was about a 6.25% move. As far as where we're going from here, it looks like we are starting to break above the 100 or above the 50-day moving average. The reason is that we are aligning here with this resistance level, right? So we might see a little bit of resistance, not just because it's the 50-day moving average, but it's also the resistance level that we ended up breaking down to the downside that used to be a support last pretty much 2 months ago, right? So that was a support. It was a weak support, but it was definitely a support. So now we're starting to try to break above it. The first level that we're going to obviously watch is going to be basically this 209 level, mostly because it kind of aligns with the 180-day and the 200-day moving average, and it's also been a resistance prior. So it was a support back here. It was a support back here. It was a resistance. It was a resistance. And then it was a support right here. And then we finally broke below it. So this is definitely going to be 209 is going to be a critical level to watch. That's going to be definitely a target for us as far as if we were trying to, obviously capitalize as far as this move goes. So the next one that we're going to be watching is going to be, it's going to be Google, GOOG. Bit of a tongue twister there. So Google, big picture, we're looking at this very, very consistent uptrend pattern. We really, really like this. We ended up seeing a sell-off, obviously, with the market selling off last week. So we ended up seeing a drop down to this 180-day, 200-day moving average, which is this green and blue, which is this green and yellow line. And we have been finding support at this level, mostly at the 180-day or 100-day moving average. But worst case scenarios, we usually see it at the 180-day level. Every time the market pulls back, we see it at the 180-day and 200-day moving averages. So that's where we're basically at right now. And so from current price points to those previous highs, which I anticipate we're going to break higher because we do tend to push higher and higher with Google. As you can see, it's just continuously heading higher and higher. So I do anticipate us going a little bit higher, but even if we return to those previous highs, we're looking at about 3.49%. Very stable, strong company, strong, stable stock. So if you want to go into something very low risk, this is definitely an opportunity to consider. The next one that we're going to be looking at is going to be LUNE. LUNE, a little bit of a riskier play here with LUNE. This one is very, very attractive though, as far as what we're looking at. As far as the opportunity goes, we are at this resistance level. So what we're watching here with this particular stock is going to be the fact that we're watching it for it to break above this resistance level. This used to be a support level back in March, and then back in May, June, and then back in July. And so then we ended up breaking below it when the market sold off. We found support at 915, and then we're attempting to break above this now so resistance level that used to be a support level, right? So if we do break above it, we're going to be looking for this range right here, which is about 9% move, all the way up until this critical volume profile level at approximately 1094, which also aligns with the 180-day and 200-day moving averages, right? So that's what we're looking at here. The profit potential to at least that, we're looking at about 10%. If we do recover to those all-time highs, that 1306 that we've came up twice now, we're looking about 29.49, 30%. So this is a little bit riskier. However, the profit potential is much, much greater. Once again, though, make sure that you do manage your risk just below this EMA. If you do get into this before we break above this resistance level, but I would wait for it to break above the resistance level, ensure that we're holding above the EMA, and only then consider this as a potential opportunity. You might miss out on like a couple of cents, but you're still going to be basically locking in 10%. So, in grand scheme of things, it's not that big of a deal. The next one that we're looking at about is LMAT. So this one here, very, very attractive because we're basically very, very consistent. Since the beginning of the year, we have been we have been just holding this 180-day moving average. And then with the market being a little bit weaker in the recent days, in the recent weeks, we ended up seeing more of a pullback towards this 180-day level. And we have just been holding this area in general. We have been consistently, like I said, pushing higher and higher and consistently making higher highs over time. So as far as this goes right now, I feel like we are at a point where, you know, we have seen the market pull back. We have seen that weakness. We have found support here at the 180-day moving averages. And if we're looking at the MACD and the RSI, let's go ahead and zoom in so that you can see the whole thing. MACD is starting to curve up to the upside, which is a good sign. It looks like we are going to start pushing higher. Not saying we're going to 64, but the first level I'd be watching is going to be 60. And so we're going to be looking at about 7.56%. If we were just looking at those recent highs that we were at before the market had that correction. So we're looking at about 7.56%. Obviously, like I said, MACD is starting to curl up to the upside. RSI has plenty of room to run before we become overbought. So I do believe that this is a very very realistic target for us as far as this particular stock goes. As far as, you know, we have had this used to be not just there, but it used to be a resistance right up here as well. So it will be definitely a strong resistance point. So 60-40, approximately that area is where I'd be looking for a take a profit level. The next one after that, obviously 64. So that's what we're looking for in LMAT. The next one that we're looking at is race. We have two more after this, and that should be it for this week. As far as race goes, we have been trading in this channel, and we've been very, very respectful of this channel. And it looks like we're at the bottom of this channel. So that is why I find this one very attractive. As far as the profit potential here on this one, obviously managing our risk under the 180-day, 200-day moving average, which also aligns with this bottom channel trend line. So the risk on this, we're looking at about, maybe I would say 2% if you're going to be very risky. It's not even that. We're looking at like 1.68%. It's not even 2%. But as far as the reward goes, we're looking about 7.51% to that top channel trend line where we have consistently seen rejections at. So when we do pull up to this resistance level, we're looking at about 7 point something percent. I believe it was 7.11% with about a 1 to 2% risk ratio. So very attractive opportunity. It looks like we are starting to push up here this week. Right now, we are starting to push up here on the RSI to the upside. We are at the very bottom of this channel. We did find support not once, but twice here on the 180-day and this bottom channel trend line. And as far as the MACD goes, it looks like we are starting to push up to the upside as well. So that is what we're looking at in as far as race goes. The last two is going to be Apple and Facebook. So AAPL is what we're looking at for Apple. So this one, very great recovery that we saw after the market sell-off. And what we're watching here with Apple is we're watching if we're going to hold this 145.27 level as a support. It looks like we are testing it right now, but we do have, obviously if the market continues to push, to stay bullish and push higher, I do anticipate this moving up another 8% to those all-time highs, or at least until this 150-day 40 or $150 price target. So that is going to be approximately a 3.73% or a 8.55% profit potential. And if you are looking at the move right here, we're looking at probably a risk of like 1 to 2%. So obviously we do have a little bit of room to still go lower. So if we do hold weak on this support and we break it to the downside, the next support that I'd be watching is 141, which was a support back here and was also a support back in July. Yeah, back in July. And so, obviously if we pull back down to this point, I'm looking at 141, 140 as support for, if we do pull back lower. However, what I am looking at is if we're going to hold this support level or not. If we do, and we start pushing up to the upside, definitely going to join the trend and obviously take advantage of this move. If we do not, obviously going to be expecting it to come down to 140 and then revisit this particular stock. RSI is not looking too hot. It looks like we might potentially sell off. As far as the MACD goes, obviously might also sell off. It looks like we did get a signal to the downside. So potential short play here all the way down to this 141 level. So I'm going to keep an eye on Apple, AAPL. And then the last one is obviously Facebook. So with Facebook, very similar to Google, very consistent uptrend pattern all year long. So that's the reason basically we're watching Facebook is very, very consistent all year long. We've just been pushing higher and higher and higher and higher. And then we ended up seeing all that market weakness. And so we ended up pulling back. If you see this dotted line, this is the -1 standard deviation, found support exactly at that -1 standard deviation. And then now, not only that, but we also found support at basically this previous resistance level when we had some resistance on the upside. So ended up finding support at that point, and it looks like we're starting to recover with the market. If, like I said, very similar to Google, very similar to, I would say, Apple, kind of. But if we do end up seeing the market recover, and very similar to UPRO, but like I said, if the market begins to recover, this one is also going to begin to recover. So, it's just a matter of time. If you do believe the market is bullish and it's going to recover, then we're definitely looking at about another 9.42%. As far as risk goes, I would probably be managing my risk just under this EMA line right here. So I'd be probably managing it like 1 or 2%. We got profit potential of 8-9%. So I'd probably manage it at about 2-3%, because I feel very confident in Facebook. I think Facebook is a very strong, consistent company. So I would be willing to take a little bit of more of a risk, give it a little bit more wiggle room to move around, just to ensure that I could lock in those 9%. So that's basically the watch list for this week, guys. If you guys enjoyed this video, found any value, make sure to smash that like button, subscribe, share this video with a friend, drop a comment as to what you are watching this week, or just in general, a stock that you want me to add to our watch lists and make sure to check up on. Drop it down in the comments below, and I'll see you guys on next week's Stock Talk video.